Welcome back to the channel. Today is going to be an interesting one. The question that everyone is asking themselves is whether they should be worried. So should you? Should you be worried? You're about to find out. We're going to do some Bitcoin TA. I'm going to show you what I'm seeing. I'm going to show you some super interesting charts. We're going to look over everything and get a good idea of what's going on in the market, whether this drop is a good thing or a bad thing, and what we can expect in the near term and even in the long term. I mean, we kind of know what to expect in the long term, but it's good to reaffirm with new data. So we're going to go over everything today, and we're going to see how Bitcoin is looking. So strap in, get ready, like the video, subscribe to the channel. People tend to watch the videos and then forget to do that. So like it now, subscribe now, and let's get moving. Make sure you actually check the description too and find my Twitter and follow me on Twitter, because I post a lot of TA updates in between my videos. So if you like the videos, you'll definitely like the Twitter. Just go check it out, see if you like the recent posts, and I'm pretty sure you'll like it and you'll follow. Anyways, let's get started. We're gonna start off first by looking at the Bitcoin chart. So let's switch over to the view so you can see it. Hang on a second, let me get this going. All right, there we go. We will get everything up and running. There we are. All right, so the first thing to see is basically what exactly happened here, right? The first main thing is, what was the move that we saw? So we saw this massive run. We're looking at the daily chart right now. We saw this massive run on the daily chart. Now, the key thing to note is, what did this do with the moving averages? The moving averages basically give us really good points of resistance or support, or of areas where we might find that we can basically use these moving averages to tell, is the asset looking bullish? Is it looking bearish? And is it breaking trends? So the first thing we see on this chart is very simple, right? We follow this back. Let's go back on the daily chart. And you see a couple of things on the daily. While we were in this major leg of the bull run, you'll see the last time we were down here flirting with all the moving averages was when we were at around 11,000 and we dropped back down to 10,000. This was in September of 2020. Now, after this area where we were basically constricted on the moving averages, we went sideways, and then we broke above all the moving averages. When that happened, we skated right on top of the blue moving average, which is the 20 exponential moving average on the daily chart. We stayed above that 20 exponential moving average and essentially got support on it the entire way up. Now, we had a consolidation when we hit 40K for the first time. We consolidated all the way back down to 30K. That put us below the 20 exponential moving average, and then we went back up. So you can see that very clearly right here, right? We went above the moving average, we hit 40K, we hit a top on this regression line, we dropped back down, and we went below the 20 exponential. That confirmed a trend reversal. We were in a downtrend, a sustained downtrend, and we got support on the orange moving average. That's the 50 exponential. Then we broke back above the 20, and once again, we skated above the 20, and we got support on it, and we kept moving. This took us all the way up to our all-time high of around 65K. Then what happened? Well, we dropped below the moving averages again. What did that tell us? Well, it told us that we may have a trend reversal on our hands. This was the first major sign when we dropped below the 20 and the 50 exponential moving averages. You'll see here when we dropped below, we didn't even touch the 50. Here we got support on the 50. Here we got support on the 50. But here we broke below the 50 and we hit the 100. So that's a key thing. We knew this was a trend reversal possibly happening. It faked people out. We had a pump that went above the moving averages. We started to get support, but then what happened? We dropped below all the moving averages. We dropped below the 20, we dropped below the 50, we dropped below the 100, which is the aqua one, and then we dropped below the 200 exponential, which is the red one. All right, so now you kind of understand how you can use these moving averages to your benefits. You know that you can look at them for support, right? You know you can look at them for trend reversals. Now, what are we seeing now? Take that knowledge and apply it to where we are now, okay? So this entire consolidation, when we dropped below the 20 exponential moving average, we stayed below the 20 exponential. We tried to break above it, but we didn't. We hit resistance on it. We flipped it from support during the bull run to this minor downtrend, which is almost like a bear market within the bull market. So we dropped below the 20 and we kept hitting resistance on it. Now what's happened? Well, for the first time in a very long time, the moving averages have become very constricted. similar to what they looked like down here when we were at around 10 to 11K, right before we started the major gigantic run up to 65. Now we're seeing the same thing. Moving averages getting constricted. We're seeing Bitcoin break above all the moving averages. And what's it doing? Well, it basically it got support at the 20 exponential, or at the 100 exponential moving average, and at the 200. Now, the way it's supposed to be is you want to see the 20 all the way at the top, you want to see the 50 below it, then you want to see the 100, which is the aqua, and then you want to see the red one, which is the 200. You want it to be in that order: 20, 50, 100, 200. That's good for a bull run. Well, basically what had happened now is we had reversed that. We had the 100 exponential, then the 200 exponential, then the 50, and then the 20. When the 20 is below everything, when it crosses below, that's called a death cross. So we had a death cross here, and we continued having death crosses all the way down. Now what's happening is, well, we had our first minor golden cross. Now we're really going to have a golden cross when the 20 crosses all these moving averages, and it's not too far from doing that. Another week or so of upwards trading, and we'll likely have some major golden crosses showing up on the daily chart. Not quite there yet. So what are we seeing right now? We saw us break above the 50 exponential moving average and the 200. Pretty far above, honestly. We came back down, we got support on those moving averages, and now we got support on it one more time. Now we're kind of falling below it. So what does that tell me? Well, it tells me that we're very likely to have major support right here at these two moving averages. That puts our support levels below us at 37K and at 36,500. So basically between 36 and 37, we should see major support. It's also very possible that if we drop further, we wick down below these, so you see a move like this, right? You see the price come down, it wicks here, and then it comes right back up, right? I can't draw too well right now, but basically like that. You see the price drop down below the moving averages, and then it comes right back up. That's called a wick. This would be a wick here. Basically, everyone buying up at these levels. So I would say, if I had to say some safe areas to put Bitcoin orders in, just in case it drops, I would go anywhere between 36 and 37, as low as 35, because at 35, we have our regression line, which is down here. So these are all potential downside targets if we continue to consolidate. Now, is this a good consolidation or a bad consolidation? Well, the first thing that I want you to see is you always got to kind of compare different metrics to one another. So let's look at a couple of things. So when we jumped up on the daily chart here, one of the things that happened is that we crossed over the 70 level on our RSI. That's down here. Now, once you cross over that 70 level, you're in a stage that's essentially called being overbought. You've moved up too fast, too quick, and you're more than likely going to see consolidation. That's why I was not shocked with this consolidation. It's a good thing. What I would like to see is, however far it goes, I want to see support at the 50 on the RSI. Even if we drop a little bit below 50, that's fine, but I want to see us be like skirting on that 50 line, because, well, why would we want to see that, right? If you go back on the RSI, throughout this entire downtrend, the 50 acted as a resistance, right? The 50 was the level that we weren't crossing. If we go back towards the bullish area of the market, well, when we were setting new highs, we were above the 50. We were getting support on the 50. So support on the 50, bullish price action. Resistance at the 50, bearish price action. So now I want to see support at the 50. That'll be another indication that we're starting to shift back into a major uptrend. So that's going to be the first indication that we should have within the next week. We should have enough data on the daily chart to see if we're getting support on that 50 level. Anywhere from 45 to 50 is fine. Even as low as 40 is okay if you bounce out of it. Once you start going below 40, then it's telling us that we're not getting support on it. So keep an eye on that. That's one very important thing to look at. What I'm really liking about this now is that the RSI on the daily chart is no longer overextended. Right now, it is sitting at around the 56 level. A little bit more downside wouldn't be a bad thing. So coming back down to around 36 to 37K at these moving averages and getting support and continuing an uptrend would be really good, because we would be resetting, these the RSI back to a sustainable level for upwards price movement. So in reality, the question is, am I worried about this drop? No, I would be worried if we kept going. If we had just kept going and we had gotten insanely overextended on the daily, well, then I would have been expecting a massive drop. Instead, I'm seeing that we have extended to a very key bullish level, which is, getting right into that overbought territory, and then we're consolidating. That's healthy movement. That's what you want to see. And it's very, very possible that at the point we reached here and people started to see, like traders started to see that, okay, it's becoming overextended on the daily RSI, they started selling, expecting a downtrend, without realizing that they were creating it. And that tends to happen a lot when you have a lot of people following the same technical indicators. That's number one. All right, chart-wise, this is looking really, really good. We go down to the 4-hour chart now, and you start to see something pretty amazing on the 4-hour. Well, let's take a look at this area here. I want you to focus on the RSI again, okay? Take a look at this level. If you take a look, I'm going to put a horizontal line or a vertical line so it's easier for you to see it. Let's put a vertical line right here when we hit this local top. You'll see what happened to the RSI. Look at where it intersects at the bottom, right? So we hit a top like right around here, okay? Now, hang on. Let me actually just send the line backwards so you'll be able to see it a little bit better. Let's send to back. Okay, so you see the area that we hit a top. It was, right around this area here at around 40,600. This was our first pump. We topped out there. Look at where the RSI was on the 4-hour. It was insanely overextended. It was sitting at 85. Well, now what's happened? Now we're at roughly the same level. We're at 38,200, which is around the same area, but the RSI is all the way down here. Now, what does that mean? Well, RSI is relative strength, so it's telling us the strength of the asset. When it goes above 70, we know it's overextended, we know it's overbought, and there's likely a correction going to be coming. Well, now we're sitting at essentially the same level where we were very overextended before, and now we are sitting all the way at the bottom of the RSI. That tells me that on the 4-hour chart, we have a lot of room for upside momentum because the RSI is so low. I want to see slow upward momentum. Everyone wants to see it super fast. Like that's what gets people going, but that's not really the best thing from an analysis perspective. If you want to see the best thing on the chart, the best thing to do would be to see slow upward movement with small drops in between. See something like that and your RSI stays low while the price moves up, leaving you in a great position to have a massive pump. Basically at this point, if we were to pump immediately over like a 4 or 5 hour period and go right back up to 45K or 40K, well, the RSI would be really high again. It would kind of undo this amazing downtrend. So the best thing to see here is slow upward movement or upward movement with corrections. So you see like a move up to 39.5 and then back to, 38.5. And then you see a move up to 41,000 and then back to 40,000. So those small corrections really help regulate the RSI. So in reality, because of the fact that we were so overextended here when we were hitting around 40,000 and now we're sitting at 38,000 and the RSI is so low, I mean, even if you look at the exact same level, right? If we go down right here, you'll see that the RSI, even at the point where we were at the exact same 38,000 level, the RSI was sitting right next to the overextended line. Now it's way lower. This tells me that strength-wise, we are ready for another pump at any time. It could happen whenever, but even if we have a little bit more downside and touch the bottom of this RSI line at the 30 level, that's fine too. It's just setting us up for bullish momentum. You always want to see something like that. You can end up seeing bearish momentum and just dropping, but usually once you start touching this line at the bottom, you're looking at the bottom of your drops. Now, there are times you'll hit that line at the bottom when you're really bearish, you'll go up a little bit, and then you'll drop down even further, and the RSI will just stay going sideways at this bottom level while the price is dropping. We don't want to see that. So 4-hour chart for the short term, we want to keep an eye on the RSI, and we basically want to see it trade sideways and start coming back up to the 40, 45 level. That's kind of your golden level for a massive pump and less chance of a drop because it shows you that you're reaching that bullish momentum again. So everything is looking good here as well. The uptrend is really good. This was a very parabolic move. So going up from 29K all the way to 42K in a matter of like a week or a week and a half, that's a very, very fast move. It needs consolidation. So seeing that consolidation is good, and I would really like it if we don't consolidate below 36. I mean, if we can stay above 36, I think that's a healthy sign, because then what we'll be doing is we won't be going lower than our initial low. So if we can stay above this, that's a good sign, but it doesn't really matter either way, because even if we do drop below that, all the other metrics are going to be reset. And a couple of them that are most important as far as fundamentals, we're going to be getting to in a few minutes. Okay, so the next thing that I want to show you is basically what I'm looking at as far as upside targets. Well, the first thing that I'm going to be looking at is our prior top. Our prior top during this run was around 42,000, which was right over here. So I want to see us break 42,000. We'll likely hit a little bit of resistance in that area again. So just expect that. Anywhere around 42,000, you might see a little drop, but the next time we hit it, it is a possibility that we just break through it. The biggest resistance that I'm seeing on top of us right now is sitting at around 46K, and that is at our upper regression line. If I turn on the Fibonacci retracement that we've been following for some time, that'll give us even more information. So let's turn that on. Let's go to our long-term fib, and at our long-term fib, you'll see that we hit resistance at the top, right at this line. This was a perfectly predicted line for resistance. If we go over to the left, you can see that this was our 382 line. It predicted resistance around 41,720. We went just a little bit above that, and then we retraced. So that's definitely an easy area to see where we may hit resistance again. That's around 41,700. So anywhere around there we could too. A couple of other areas to look at if you're looking at the 4-hour chart are simply the moving averages. That gives us levels of 39K, 38,900, 37,300, and 36,000. So all these areas are really key, and seeing how Bitcoin interacts with the moving averages are really key. Overall, the fundamentals are really going to show you if you should be worried. Short-term price movement in the reality of things for an asset like Bitcoin is not that big of a deal. What really depends is where you see it going long-term and whether or not the fundamental on-chain data metrics are supporting what you're seeing, right? Okay, so let's move on. I want to basically show you a couple of other things, really not that much. The next thing we're going to look at is CryptoQuant. We're going to look at the net flow data. So let's go into our full screen mode so you can see this a little bit better. So what you're seeing here is that we've been seeing a lot of up and down spikes. Basically, every time we've spiked up, we have seen the price dip a little bit. This upward spike is net flow coming in. These are Bitcoin going on to exchanges. The bottom spikes are Bitcoin leaving exchanges. The good thing is that after most of these upward spikes of Bitcoin going on to exchanges and then the price drops, we have seen Bitcoin leaving the exchanges. So you're basically seeing certain people selling, other people accumulating. It's what you want to see, healthy movement. Now what we're seeing is earlier today, August the 3rd, 1637. So this would have been around what, 12 and 4 p.m. So around 4:30 p.m., about 3 hours ago from when I'm recording this, we saw 1,800 Bitcoin come onto exchanges. Since then, the price has gone up. So I would be looking for potentially a little bit more downside if the price starts hitting 39,000 or 40,000 again, because if this Bitcoin was this Bitcoin could have been used to leverage long. If that's the case, well, it could help explain why the price has moved up if someone did a long trade here. But someone might have moved this Bitcoin onto exchange because they want to sell at 40K or something like that. So we should be ready for potentially more downside if we continue to go up, because we haven't really seen any major movement yet on the downward trajectory from this inflow. So keep that in mind. Looking at the net flows is very important. I really recommend CryptoQuant. Their prices are really good. And honestly, I like it. It's a good platform. I miss that there's certain charts on Glassnode that I don't have access to, but CryptoQuant's doing a great job with talking to us, like giving the verified authors certain features that may be necessary. And overall, the data is enough for you to do really good analysis. So check it out if you're interested. I don't know if I have a referral link in the description. If I do, click it. If not, I'll see if I can put one. Let me know in the comments if I even have one in there. I'm not sure if I put one there. Okay, the next thing I want to show you here is the exchange reserves. Now, the exchange reserves is very interesting. This is a super interesting chart because so what you're seeing in the blue is the price, and then in the orange are the exchange reserves. We're basically seeing the amount of Bitcoin on exchanges took a massive dive when the price went up from 29K up to 40K. This is really, really interesting because this area that it fell into, if we draw a little bit of a rectangle here, let's go here and find the rectangle tool, and let's go to the bottom of this area all the way to roughly this area here, right where our zero level is. Well, basically what you're seeing is, in the past, when the price dipped into this exact same range, so when you had drops, we had a drop into the range here, price went up. And then we had a drop below the range here, price went up. We came here, we had a drop into this range, price went up. We had a drop below this range, price went up. This kept going, the exchange reserves kept rising, and the price kept falling. So now we're seeing a very clear correlation with exchange reserves and price movement. The exchange reserves just dropped more than they have in the last 7 months in this short of a time frame. Seeing this gigantic of a drop in exchange reserves is a very bullish sign based on historical data during this bull run. Keep that in mind. If the price just started shooting up to 50, 60K, it wouldn't surprise me because the exchange reserves have dropped. We've created a supply shock, and we're going to now dive into that supply shock. What does that supply shock really mean? So there's a couple of great charts shared by Will Clement on Twitter that I really like. I want you to see these. They're going to give you great information. Now, this is really going to answer your question of whether or not you should be worried. Are you worried about Bitcoin? I personally am not. I have zero worry, and I'm going to show you why. So the first thing, the stock to flow deflection. This is how far we are from where the stock to flow predicts the price. How far have we deflected? Well, there's a trend line here of the deflections over time, going all the way back to 2011. Will pointed out that there is and make sure you follow Will, that's WCLEMENTE, and then 3 I's or 3 L's. Will Clement the third, but I don't know if he used I's or L's. So you'll be able to find him even if you just follow me. You'll see I'm following him. He's one of the few people I'm following. Okay, anyways, what we see is this downward trend line. Now, there are key points where the deflection got really low and we hit this trend line. Every time that happened, the price went on an uptrend. You'll see another point here. It dropped. Price went on a giant uptrend. We deflected again. We hit the trend line. Price kept going up. We hit the trend line. Price kept going up. Traded sideways, went down. We were away from the trend line. Nothing major. Now we have had our next deflection. These deflections normally happen when? In the middle of bull markets, in the middle of bull cycles, right? Starting with the first one in the middle of a bull cycle, middle of a bull cycle, middle of a bull cycle. Both of these were in the middle of a bull cycle. We actually started our bull cycle all the way here, but we did not touch the deflection line. And now we have come down and we have touched the deflection line once again. If it is anything like these prior data points, it could be the first major indication that we are going to have a massive multi-month reversal into the upside. Keep an eye on it. This is a super interesting metric that I personally had never figured out on my own. I had always looked at the deflection chart, but I can't believe I didn't think of looking at it on a 10-year time frame and just drawing a trend line. So I'm really glad he did this. This was a great thing to see. And to me, this is an extremely bullish sign of historical data because, you know, historical data doesn't dictate what's going to happen in the future, but it gives you a pretty good idea that probability is on your side, that if this continues happening, we'll likely react in a similar fashion, especially now with what's going on with global economies and inflation. Like, there's so many reasons to get into Bitcoin now that there weren't at these prior times. And now suddenly we have a deflection and we're supposed to assume that it's going to react completely different. I don't think so. I think now people have more of a reason to get in, and the deflection line is giving them a great price to get in on. Basically, when you're deflecting from stock to flow, it means that the price is predicted to be much higher and you are much lower. Now, in this sense, this might be one of the best buying opportunities. I mean, 29K probably was the best buying opportunity we're going to see in a while, but anywhere between 30,000 and 50,000 is likely a tremendous buying opportunity when it comes into terms of where we're going to be, you know, a year from now, 2 years from now, 3 years from now. In that sense, you know, I think 3 to 5 years from now, people are going to be wishing they were buying at 30,000. They're going to be like, oh, I wish I could have bought Bitcoin at 30K. Like, that's going to be said. If you had told people that you were buying Bitcoin at 6K last year, they would have been like, oh, you're crazy. Who's buying Bitcoin? You know, all the markets are going down. People thought that Bitcoiners like us were nuts. And then what happens today? People are wishing they could have bought at 6K. I think the exact same thing is going to happen over a longer period of time. Let's move on. Another chart shared by Will Clement. So he says here, illiquid supply ratio has taken another leg up. Bitcoin's supply shock is now at levels previously priced Bitcoin at levels that previously priced Bitcoin at 53K. Consolidation after 10 straight green days is very reasonable, but still remain bullish over the coming weeks. Now, the first thing to understand is what is a liquid supply. All right, so anyone can tell you, oh, the liquid supply is up to where it was at 53K. That's good for Bitcoin. What is a liquid supply? So there's two types of supply. You have liquid supply. Liquid supply is Bitcoin that can be exchanged for cash immediately. Essentially, I'm giving you very rudimentary definitions so you can understand the concept. So if I have Bitcoin, if I have one Bitcoin, and I take half that Bitcoin and I leave it on the exchange, and I take the other half of that Bitcoin and I put it onto my cold wallet. Well, that means that half of my Bitcoin is now liquid because it's on the exchange and I can sell it whenever I want. The other half is illiquid because it's stored in a cold wallet off exchange. The illiquid supply is the amount of Bitcoin that is not on exchanges. It's the amount of Bitcoin that is stored in cold wallets in areas where you don't have immediate liquidity. Now, that also means that this is supply that's unlikely to be sold because people are moving off. I always see comments on Twitter, people saying like, oh, that doesn't mean anything because, you can always just transfer it right back to an exchange and sell it. So exchange reserve and a liquid supply is nonsense. That's what people say on Twitter, and I can't even tell you they're dead wrong because if you're buying Bitcoin and you're planning on buying it low and selling it high, well, then you pretty much need to have an order set, right? You're going to buy it and then you're going to set an order to sell it. You're not just going to hold on to it on an exchange for no reason. And you're sure as heck not going to have a cold wallet and be moving it off the exchange if you're planning to sell it immediately. So there is a lot of backbone behind these metrics. What they're telling me is that since the price has dropped, so when the price dropped, the illiquid supply dropped tremendously. That means there was a lot of Bitcoin being moved onto exchanges during this drop that you see here. This black line, this dashed line going across is the 53K level. So you'll see that we fell right below the 53K level and we kept on dropping. The illiquid supply was going down like crazy. So that means less Bitcoin stored off exchanges. So more Bitcoin was going onto exchanges. Now what we're seeing is, as we've been consolidating, even though the price was moving down, the illiquid supply kept moving up. This is showing us accumulation. This is showing us that people were buying Bitcoin on exchanges and they were moving it off exchanges. Now, since the price has gone from around 29K to back to 40K, like in the 38 to 40K range, well, the illiquid supply took a huge spike up. We saw massive amounts of Bitcoin leaving exchanges and going on to cold storage. Now, there was some of this Bitcoin leaving exchanges that was amounting to cold wallets of different exchanges themselves. It was essentially exchange to exchange, inter-exchange transfers, like Binance moving stuff to their own cold wallets. Now, if that happens, portions of it are still counted here, so this number could be a little bit lower than it actually states, but the fact of the matter is that any of that Bitcoin that's moved is no longer liquid. It's being removed from the exchange reserve and it's being stored in another place. Could it come back on exchange? Some of it could. Obviously, all of it could. But the metric that we're looking at is that within this entire range, we have seen a ton of accumulation and a ton of Bitcoin leaving exchanges to the point now where we're back at the level we were at 53K. That is massive because now the illiquid supply ratio is way higher than the price. And usually when that happens, well, the price catches up. So the supply shock is happening with Bitcoin. It's occurring. You don't see it on a day-to-day basis, but it's happening. The only thing that needs to happen with that is demand rising. As the demand starts going up, the supply shock that's being created during this consolidation, well, it's coming into play because eventually people are going to want to buy Bitcoin. And when they want to buy Bitcoin, when some other company comes out and says, oh, we're putting money in Bitcoin, when inflation keeps going up, when all these things start happening, and people realize the meaningfulness of this technology, and then you have institutions or whoever else it is, even if it's individual investors coming in to buy, well, look what's happened to the supply. The supply is becoming completely illiquid. Like, people are taking it off exchanges. They're going to have to bid up the price to get people to sell, and that's when you're going to see the price go up. That's what I'll leave you with. I think that this is all very, very interesting. I think that, honestly, being scared right now is a little bit of a misstep. I think if you're scared, you need to research. You need to learn. You need to read. Go to bitcoinmagazine.com, click on learn, read through a lot of those articles, understand the asset. I think this is one of those things where if you really understand it, then you start to look forward to these drops. Personally, me, when I see it dip like this, I love it, man, because whenever I want to buy, I'm buying Bitcoin under 50,000. It's crazy. In my opinion, the fair value of Bitcoin with everything going on in the world right now should be between 75 to 100,000. Easy, maybe even higher than that. Because as soon as the price goes up to that level and stays there for some time, well, the fair value rises because now you suddenly have the demand dictating that fair value. All right, keep everything in mind. I could keep talking forever. We've already hit 30 minutes. That's a lot longer than I wanted to go. I hope you enjoyed it. Make sure you like, make sure you subscribe, give me your comments, and welcome to all the new people. I know a lot of us joined it. A lot of you joined us here with the recent eGold video. I hope you enjoyed that. Another eGold video will be coming later this week, but the Bitcoin videos will keep coming too. And soon we'll be getting back to Ethereum and Cardano. So keep an eye out. We got a lot going on, and we're going to have a lot more coming in the coming weeks and months. See you soon. Have a wonderful evening. Peace out.